Good morning all and welcome to this morning's video. So I hope you had a great weekend and I hope you are ready for the week ahead. I have two pairs on watch today and those are Euro Yen and Kiwi Yen. So my favorite of the bunch, which is Euro Yen, I'm going to break that down for you now. And I'm going to start off on the weekly chart in this instance just because it makes sense to do so. So we are at an all-time high, okay, according to my data at least. See the little dinosaur there on the left hand side. We have this very sharp move. I'm not surprised in the slightest that we gravitated towards this area here where volume was triggered, and look how it was triggered. We had a very sharp move up, and look at the runoff that was caused when volume was triggered in that area last time around. Okay, that's often an indication of how much volume is actually sat there, because obviously the price action is the mid price, the average of the bid and the ask. Okay, so if we trigger some volume here and this happens, then obviously by definition a lot of volume must have been triggered. So it's no surprise to me that we gravitate back towards that area. We have this, we wick above. Okay, we've wicked above, now we've wicked through and not to, so that's a good clue that we may have washed out all of the liquidity. One thing to touch on though is when we have such a significant high such as this, particularly an all-time high, as I said, at least according to my data, it wouldn't surprise me if this, what we're seeing at the moment, is a trap to trap the sellers into the sells too early. And that's because I would normally, such a significant high, I would anticipate probably more of a break. Okay, but we have met the minimum requirement. We have wicked through and not to. Okay, so as I drill down, you can kind of see that we have this corrective price action leading up to this. This is not the sort of, if we were going to blast to the upside, well, where are we blasting to for first of all? And we would normally see these tighter flags like we would normally see more of a direct move. Okay, this is exhaustive price action. Okay, and what we normally see with exhaustive price action is on the last leg we see a bit of momentum. Okay, so that ties in as well for a move to the downside. Okay, you can see this daily candle here. We had the last daily candle had momentum. That kind of ties in. That's usually just the buyers getting out of their positions, okay, as we approach such a significant area. 4-hour chart, you can see we've had a very, very solid push down, but we ended on a bit of a wick. So it's no surprise to me that we're pulling back a little bit. When we see these 4-hour candles like this and they end on a bit of a wick, it's usually the case that we will consolidate for a period of time if we're going to move to the downside. So 1-hour chart, look at this 1-hour candle. This to me is one of two things. Okay, this is why we wait for the corrections afterwards and we don't just jump on board with the masses. Okay, when we see a big wick like that, that's either an indication of two things. It's either an indication of a structure like, something like that for a move to the downside, a correction which would be proportionate to the move down which has preceded it, or as I said, this is the market trapping the sellers in too early because we didn't see as much of a significant break of this high as we would typically see for a move to the downside. Okay, so with that in mind, what I'll be looking for is the following. I will be looking for, as a minimum, so I wouldn't be looking for a reduced risk entry, because if you look at how this is pulled up, that is likely to give us something like this, what I've just drawn, my forecast, and that would give us a risk to reward. We would have to have a massive stop loss to get short on the break of a structure such as that. So I wouldn't be interested in that. But what I would be interested in, if we got a 2-touch 15-minute continuation as a minimum, this is looking more like a 1 hour, which would mean 6 to 8 corrective 1-hour candles, which would mean this likely wouldn't be ready till tomorrow morning. But as a minimum, if we got a 2-touch 15-minute continuation, so 6 to 8 corrective 15-minute candles, then I would look for a risk entry within the structure to maximize my risk to reward. And what I would do then is I would measure from range to range, so the high that we just broke, and I would measure the 90% area of the range. Okay, so we have this daily low here, okay, which is there, which just so happens to be exactly where this wick formed. So that's why I've said that the 90% area is often where price can pull back sharply. So what I would do is I would set a take profit at this low if I got this entry, while simultaneously trailing my stop loss. Okay, because then if we did pull back deeply from the 90% area and keep going, I wouldn't give too much profit back to the market. And also, we don't know after such a large correction if it's going to keep going at all. Okay, so that would give us something in the region of, so we'd have about 4.5% to the low of that structure, and then about 13% to that 90% area, which I just illustrated a moment ago. So that is euro yen. What I've done is I've set an alert just around here to see if we can push down to form some kind of base, for a move back up. Okay. So if that doesn't trigger, then we're not forming any kind of base for this, this flag that I've drawn. If price just blasts to the upside like that, then we've likely just trapped the sellers in too early, and I will not be looking to place a trade on this pair. I will be letting price do what it needs to do up there, wash out all the orders, take out even more, take out the sellers who got trapped in too early, and then we would reconvene at a later stage. So we'll see what happens. You can see if we just drill down, there was a little inflection point here that I thought may act as the top of the flag. Okay, if indeed it actually forms, but we've kind of broken through that now. So I'm just going to let price do its thing and do what it needs to do. And as I say, if that alert does not trigger, then this flag is obviously not shaping up. So that is euro yen. I'm just going to leave that on the chart. I'm going to save that because sometimes my forecasts mysteriously disappear. So it's a similar picture with Kiwi yen. Okay. However, one of the reasons this is lower down on the list, this is still a low risk position, just to touch on it. So this euro yen position, would I be well positioned for a move to the downside? Yes. Would I be well positioned on the lower time frames? Yes. Would the sequence look all right? Well, yes, that would look fine relative to the moves which has preceded it and this big drop. Okay. And then there's no reason for price to take me out if this was to form, because it's washed out all of the liquidity, and we've had the correction afterwards would be the confirmation that we would look for to determine that price was going to push lower. So that would be a low risk position in my experience. So Kiwi yen. So on Kiwi yen, you can see that we've done exactly the same thing as what we've done on euro yen. We've tapped this area of volume where volume was triggered. And we've wicked above, we wicked through and not to. However, in this instance, you can see that there is a sharper area of value sat above. Okay, it is quite a long way away. I believe it's about 300 pips, but we have this very sharp move up, followed by the sharp move down, suggesting there's a lot of liquidity here. So what this could be, okay, it doesn't mean to say we can't place a trade just because there's a high sat just above, but what this could be some kind of move down to here, for example, where there's a bit of a base. We end up doing something like that. We tap into it, and then we move to the upside and get more of that structure to tap into that high, which we near missed to. Or excuse me, or this could be, we could be seeing something like that, where we end up with a reversal structure like that, and then tap the high. But we could certainly capitalize on a move down to this low, just as is the case with euro yen. So we've had the wick through and not the wick to. You can see that we've pulled back quite sharply. So either, once again, this is the sellers getting trapped in too early, or this is just after a large drop, price consolidating for the next leg to the downside. Once again, that's why we wait for the confirmation. Same thing again, solid 4-hour close, but we ended on a bit of a wick. So I'm not surprised that we're pulling back sharply. That often happens. So I'll be looking for the same, in this instance, I'll be looking for exactly the same thing again for the exact same reasons. Okay, a 2-touch 15-minute continuation is a minimum. You can see how we've pulled back there, that this will likely be a 1-hour structure if it forms. And I've done the same thing as I've done with euro yen. I've set an alert just slightly lower to see if we can form some kind of base to give us this structure. And then if we did, just to touch on it, if that alert was triggered, I would set another one at the top of the structure, so around here, to see if we can push back up to tap the high, and then I could get short once we reject that high, if that was to actually occur. And then just as it's very, very similar to euro yen. So I asked myself, if that was to form, would I be well positioned for a move to the downside? Yes, although we've got the high sat above, we would have had the confirmation, so I would be well positioned on the higher time frames and on the lower time frames. Would the sequence be okay? Well, yes, this would be proportionate to the move down which has preceded it. There's been no sharp pullbacks. Well, none of these kind of sharp pullbacks which pull back like 60% of the move. This would be proportionate and what I would anticipate after a big drop like that. So, and there's no reason after that for price to just suddenly tag me out because the high sat above is some distance away. So this would be another example of a low risk position. And same thing again, I'll be able to manage it to the low for about 3%. And once again, I would use the mechanical. So, we could get down to this area and keep going, but you can see all of this volume. Okay, there's a lot of volume here. So if we did keep going from this area, we pushed down and we kept going from that area, I would anticipate a lot of price profit taking and price pulling back quite deeply before it continues in the forecasted direction. So that's why I would use the mechanical management tool. And once again, I would measure 90% of the range. And then that would give us about 11% down to that low. And I would trail my stop loss accordingly, just as with euro yen. So let's see what happens with these pairs. You can see, did I just move my alert then? No, that's fine. Right, so you can see that we're kind of rejecting now, or we appear to be. So we appear to be rejecting that little inflection point there, which is visible on the 5-minute chart. Okay, so I'm just going to let this do its thing. Okay, we don't need to jump in. There will be a lot of FOMO. People would have seen this break of the high. People would have seen this move. There is going to be a lot of FOMO going on at the moment, and that's why some of these people are professionals. Okay, FOMO affects a lot of people. So the ones who tend to do well in trading are the ones who are are not experiencing FOMO. They're sticking to their rules, and that's what I do. I stick to my rules. I don't deviate from this. And one of the reasons I make these videos, or one of the reasons I used to make these videos, I don't really need to do that anymore for this reason. But one of the reasons I used to make these videos is to hold myself accountable. So it prevented me from, taking shitty trades, basically. Excuse my French. Because if I knew that I was going to have to make a video to break down a trade the next day and it was a crap trade, then obviously it's a little bit embarrassing. So it kind of making videos, if you're not already doing that, is a good way to hold yourself accountable and to prevent you from taking these crappy trades if you're going to have to explain it to someone like the following day. So if you're someone who jumps into trades, that might be something that helps you. It was something that definitely helped me in the earlier days. But I've rambled on long enough. That is Kiwi Yen. I hope you've enjoyed this video, and I will see you again in the next one. And of course, if any of these things shape up, if they do, it will likely be tomorrow. But if anything shapes up, and I've placed a trade, I will break that down for you in the next video. Thanks very much for watching. Have a great rest of your day.